Right, everybody, welcome to today's episode of Comp Talk. I'm your host, Todd Thams. Thank you for stopping by. So, today, one of the things that I want to talk about and share with you is why you should be auditing or looking at the documentation that the insurance company sends to your insured when it comes to workers' compensation policies. And I mean, this is our entire industry is human and people make mistakes, and it's up to us to maybe catch some of those mistakes. And so today what I want you to do, if you have a minute, is grab your workers compensation policy, and specifically we want to look at the deck page or the declaration page. And on that there's going to be three numbers, four numbers, 1, 2, 3, 4, depending upon how yours is laid out. And what we want to do is focus on number three. Three is going to be broken into four parts: 3A, 3B, 3C, and 3D. And what does this mean? This is probably the most important section on the workers' compensation policy because it's going to tell you and your insured exactly how coverage is going to apply. So in 3A, usually you will see the state that your business or your client's business is headquartered in. And any states that they normally do work in is going to be listed there. And this lets the insurance company know, and the insurance company agrees, hey, we understand your client is domiciled here. Coverage applies to that state and any states that they typically do regular work in. So if you're maybe a city, you're located in a city that borders 1, 2, 3, or 4 states, you may see all of those four states regularly listed because you may be doing work in those states. Um, when we get to 3B, this is the limit of coverage that applies to your company if there's an an employer's liability claim. Usually you see these in 100, 100, 500, or half a million limits or a million limits all across. And then an umbrella will go over top of those. And number three is other states' insurance. So we just looked at a policy the other day, and the other state's insurance was left blank, and the insurance company unintentionally left it blank. So what you'll see on 3C of a deck page is part three of this policy applies to the states, if any, listed here. Usually you'll see a list of states or all states except monopolistic states or none. If it says none, you have a problem. Imagine for a second that you've got maybe a worker that works in another state or maybe travels to a conference and is in that other state. If 3C says none, the workers' compensation coverage does not apply there, meaning your company has a problem. If your company has remote employees that are scattered all across the country in multiple states, put those in 3A. The incidental exposure is meant to be covered in 3C. So, not every insurance company is licensed to write business in every single state, nor do they want to. You have some companies that they write policies nationwide. You have those are called national carriers. Then you get down to your super regionals, your regionals, and your micro regionals. And your micro regional might only operate in a handful, 3, 5, 7 states. And they're, they don't provide coverage automatically unless it's listed on 3C of the policy. So if I am in North Carolina and I attend a conference in Las Vegas and my other state's insurance section is blank or says none, there's no coverage for my employee while they're at a conference in Las Vegas if they get hurt. Taxi cab rides, accidents, slip and falls, all of those type of things. So it's really important. Number one, 3A, make sure all of the states that your company, like if you're a contractor or you've got work at home employees or people that travel consistently, put all of those states in there. It can be more than one. It's perfectly okay. Make sure that 3C has all other states listed and it's not blank or it doesn't say none. You might also see things like, or maybe verbiage such as all other states except monopolistic states. And if you don't know what that is, this is why insurance is so complicated. In almost every state in our country, coverage applies except for 4 states. And these 4 states in our great country have chosen to not allow competitive insurance companies to provide workers' compensation. You must go and get it from that state. They are the only option, they are the sole option. You have no other choices at all. Those 4 states are North Dakota, Ohio, Washington, and Wyoming. So if your company is going to take a job, maybe you're in Minnesota and you have a contractor that's going to go do some work in the oil fields up in North Dakota, you've got a potential problem. Because if you look down at 3C on your policy, North Dakota will not be listed. And many times it's expressly excluded because it's a monopolistic state. So your business has a problem if you've got employees or an employee that is going to do, whether it's a long job or a temporary job in North Dakota or Ohio, Washington, or Wyoming. So what do? There's 2 things that you can do. Always talk to your clients about this. Ask them where they're working at. Ask them what they're doing. Ask if they're going out of state, because they probably don't know, especially if they're a new business or maybe they've not come across this before, or this is a one-off job. And I think we're seeing more people go farther and farther right now for different types of work, and projects are popping up all over the place. So it's really important to stay in front of our clients and find out what they're doing so that they don't have a problem or a claim problem when it comes to their employees. If that employee is going to North Dakota, what you as the agent need to do, or what you as the business need to do, is call your agent, call the company, and find out how they want to handle that. There's 1 of 2 ways you can do things. One of them is going to be a stopgap endorsement. A stopgap endorsement is an endorsement that rolls on to the general liability policy that provides limited coverage for these monopolistic states. It works similar to a workers' compensation policy, not quite the same. Perfect for those one-off type things or limited exposure type deals. A better solution may be to go directly to the state if you know that you're going to have a crew working there for months on end, and just purchase coverage directly from North Dakota to make sure that in the event that your employees get injured, your company and they are protected. So it all depends on what the comfort level is of the company, whether the company is maybe a national player or familiar with that exposure. Typically, the smaller regionals may hesitate a little bit more, and that's an exposure that they do not want. And so they'll ask you to go purchase coverage directly from the monopolistic state. But that's the deal there. I mean, you're good. Most businesses are good throughout the entire country, except when you go to North Dakota, Ohio, Washington, or Wyoming. If they're going there and they don't have, your company does not have a stopgap endorsement, you got a problem. And if they're going there and they're working, they may have a potential, you may have a potential claim problem or an exposure that you didn't even know existed. So I hope this information was helpful for you. With insurance, it's always best just to ask questions, especially if you're doing unique things like this or you are unsure. Make sure your company employees are protected 100% of the time, and review your workers' compensation policy. Make sure the other state's endorsement is on there. If it's not, you've got a problem. And then make sure that if you're going into monopolistic states, you're double checking whether you have a stopgap endorsement. Hope this information was helpful. Have a great day, and we'll see you again soon.